Good morning, my friends and clients. This is Tuesday morning, it's April already, April 7th. So what have we seen the last few days? Market is still very, very, very volatile. We've seen big changes, right? We've seen in the last 5 days, minus 1.6, minus 4.41, plus 2.28, minus 1.5. And then yesterday, hallelujah, some good news at 7.03. Just a lot of change up and down. But if you really think about it, it comes down to plus 1.41% over a week. So we still see the volatility being very, very high. There's the VIX index that measures volatility, and the good news is the VIX index came from a tremendously high of 80% down to like 40, 45%. So a little less volatility, but still a lot of volatility. So there was a very, very famous US philosopher, very profound guy. His name is Mike Tyson, right? He's got a great saying. It says, everybody has a plan until they get punched in the mouth. And what I'm expecting is that a lot of people's risk tolerance has changed during this period of time. We experience all the time when this type of turmoil comes, everybody's tolerance for risk shifts. And so this is very, very important to keep that in mind and to reach out to us to have a discussion. I don't always know exactly how you feel about things. I'm reaching out to each one individually to have a conversation. But when risk tolerance has changed, please reach out to us so that we can discuss this with you, because these are very, very volatile times. We're going to be expecting earnings reports to come out in the next 2 weeks. We're expecting very negative reports. It's kind of interesting, the markets respond positively on bad news because the markets often have expected worse news than what is coming out. But right now, the economical data is expected to be very, very negative. We've seen an adjustment in the GDP number that is expected for Q2 to be minus 30%. Before it was by minus 24%. We had a great day yesterday simply because the curve or the increase in cases and deaths in the United States is less than expected. So we'll still see a lot of volatility. So what have we done? We've worked and focused a lot on getting you ready through planning to be able to build stabilizers in your portfolio. Those folks who have no stabilizers, that have just pure equity positions, no downside protection, we have done some significant research to bring in what we call tactical asset managers. Tactical asset managers uses algorithms that they've successfully developed over years and years to be able to kind of read the market a little bit more closer, see exactly what the trend is, use very, very strong computer systems to be able to figure out when to phase money back into the market. It's very difficult to do, and therefore, if you got companies that have built these algorithms through other down markets successfully, we have interviewed two specific companies, and are very close to making a decision. Actually, we interviewed more, but we're very close to making a decision to bring in two new companies, a company called Milliman and Exact Strategies. You'll see us start deploying that very strong, just for cash positions that we've taken out of the markets to kind of trend back into the markets. We also have opportunities to be able to phase cash that was on the sidelines into the market, because it still represents a really, really good opportunity. We've developed an individual stock portfolio that we talked to you a little about, as well as a high quality dividend stock positions. I've seen a latest indicator of just what happened in Q1. Large cap growth, high quality blue chip companies reduced the least amount. They are the highest quality. And so in this turbulent times, we're thinking about phasing money back into those. We're doing tax loss harvesting. So we're using some tax strategies this year to take advantage of creating tax losses that you can offset against your income, create more cash flow for you. Also seriously considering Roth conversions. This is a time when the markets are very, very low, transitioning out of a taxable environment to a tax-free environment. $2 trillion of additional debt. Folks, we are expecting significant income tax rate increases probably in about 3 to 4 years from now. Also take a look at the 30-year mortgage that you might have and refinancing opportunities. I've been discussing that with a lot of clients because there's great opportunities to reduce your interest rates by at least 75 basis points to 1%. This is a time in which most people are looking for advice. They're looking for somebody that can help or somebody they can talk to. Any of you in our client base, feel free to reach out to us and schedule a 25-minute conversation. Love to hear from you. Love to speak with you. I'd love to help you digest, even through the CARES Act, how you can be helped as a business owner as well as an individual. There's really good strategy here. Please attend also to webinars that we are publishing and making available on our YouTube channel. And please feel free to pass this information on to anybody you care about. We would be happy to reach out to them as well and have a 25-minute conversation with them. You can go to our website and simply schedule a time to connect, and we'll be happy to help you in any way, shape, or form. I look forward to speaking with you later this week, and as you anticipate a great Easter weekend, I look forward to being with you again. Thank you.